out, you know, committed to that, just stepping out of that comfort zone. You know, even when I was in the military, you know, mindset was a big thing for me. You know, we all have our ups and downs. None of us are perfect. You know, all of us should know me as the blue collar baller. You know, all this great work experience. Well, in my periods of my little down spirals, or I didn't catch my little attitudes and stuff, you know, I joined the military pretty young. You know, there was only one thing that pulled me out of those spiraling motions. All right, you guys, you know, we're young. You know, once you get into trouble, it's really easy to continue getting in trouble, especially in the United States Army. Really easy. All right, you guys. Like I said, the only thing that was going to pull me, there was nobody. I was grown. You know, I was 934 miles away from my home address. You know, I had no friends, no family out there. You know, phone calls can only do so much. The only thing that was going to pull me up out of my gutters, my ditches, was me. I had to align myself with the proper mindset. You know, guys, and there when I have this instance in mind where I just committed every single morning. When I went to PT, I was gonna yell. I was gonna get my day started. You know, we all call things like the platoon sergeant or the group leader would yell out the name of the exercise, and the group repeats it. You know, I'd just get to the top of my chest, and I'd be yelling. You were gonna notice how motivated I was that day, you guys. Get into those affirmations. At some days, guys, that's all you're gonna have. All right, you here on this currency exchange education, you're on a journey. All right, you guys, and there's gonna be a day where that mindset is all you got. All right, so we want to practice right now while we know we don't have anything imperative happening. We're relaxed. We're in our cozy spots. We're at home. We're kicking it with our BYOB fam. You know what I'm saying? Get in that chat, drop it in there where you're calling in from. What are your affirmations? I am an educated BYOB master trader anointed for wealth. I am the signal. All of my trades end in profit. I am 777. Good evening, Cleveland, Ohio. Good evening. Good evening, Texas. I'm glad to see you. Good evening. Good evening, Cleveland, Ohio. Again, good evening, Conyers, Georgia. Showing up, showing out. Minnesota. Chattanooga, it's nice to see you right down the street. What's up? Cleveland, Ohio, good evening. Good evening. Good evening, Essex, UK, worldwide representing. Good evening, Cleveland, Ohio. You guys are really showing out. Milwaukee, what's good? Chicago, good evening. Cleveland, Ohio, again, man. Some people are gonna start thinking you guys aren't the other Cleveland. All right. Toledo, Ohio, good evening. Good evening, Virginia, good evening. Don't forget those affirmations, you guys. Good evening, Cleveland, Ohio. Jacksonville, Florida, Mount Vernon, good evening. Mount Vernon, New York, that is. Educated master trader, good evening. Orlando, Baton Rouge, good evening. Milwaukee, Jacksonville, Florida. You guys are really turning up tonight. Good evening, New Jersey. You guys are really turning up tonight. Thank you guys for dropping in the chat. You know, I really appreciate you dropping it in there just to see that, you know, again, those affirmations are for you though, you guys. So drop in the chat where you're calling in from, what your affirmations are. You know, take the time you need. Good evening, Baltimore. All my 111s. If this is your first time joining the Market Talks call with me on Thursday, all right, this is a specific question. 111s. If this is your first time on Thursday with me tonight, 111 in the chat. Go ahead and jump out your comfort zone. Put that 111 in the chat. No need to be embarrassed here. I just want to make sure that I can address everyone appropriately that, you know, is on group with us tonight. All right. Good evening, Tampa. 222s in the chat for everybody returning. You're back with me in the lab. You're ready for this deeper skill set, this market structure. Thank you guys for your trust, your confidence. I appreciate you guys tuning back up for me. This one is for me, and I appreciate you guys. I really do. Now, it's not just for me. This is like a symbiotic relationship here. All right. The tuning in, the catching the videos, catching the calls, All that is part of that same journey that I mentioned. All right, you guys, you want to be showing up, you want to be diving into that education head first. If you want to be head first anywhere in this arena, it's in this education. All right, you guys. So we're making sure that we check the box with our basic understanding in the IM Academy, right? Then we get into every single call that we can make ourselves positioned to. All right, and we pray about the ones that we can't get to, that will make ourselves available in the future. All right, and then outside of that, intermittently, we're on the BYOB YouTube channel. All right, diving in to the market structure playlist and everything else that you really see on that channel, you guys. So much sauce there for you. Go ahead and play around with that channel. Spend some time in there, you guys. After you get done with all that, head on down to me to BYOB movement .eventbrite.com. All right, you guys, because we are coming to you this weekend. All right, on the 19th of February, you guys, on the 19th of February, let me get to the right one. BYOB movement .eventbrite.com. Yeah, it seemed to do this to me a couple of days ago, but this weekend, you guys, as of the 19th, Saturday, Milwaukee, Jacksonville, and Cleveland, Ohio. We are represented in the physical. You guys, come on out, fellowship with us, be a part of the movement. Okay, you guys, get beyond the little rectangles, as our finance doctor likes to say. Get beyond the charts. Come meet with us. All right, part of those one of those healthy habits that we talk about on our other calls. You guys, come on out, get a part of the fellowship, learn a little bit, bring some friends. All right, you just join the experience. All right, on this Sunday, you guys, we haven't forgot about our worldwide initiative in London. We are going to be live at 10 a.m. with that same representation. You guys, turn on out to the Advent Center. All right, 10 a.m. guys, local time in all these places, local time, 10 a.m. All right, show up, show out. All right, dressed, ready to impress. Bring your favorite pen, your favorite notepad. All right, if you just like iPhones and digital notes and iPads, you savvy and swaggy like that, hey, bring that too. All right, you can utilize that to its fullest potential. All right, you guys. So after that, don't forget, you guys, we also want you to go to BYOBmovementllc.com, and we want you to get registered for your select prepaid MasterCard. All right, I am fat fingering it all over the place tonight. llc.com, BYOBmovementllc.com, you guys. Right there, prompt two, as you get to the website, you guys. Our efforts have been vetted by MasterCard, you guys, and we are in a position to offer you this way to spend. All right, you can hold what once was a vision, you guys. Why I stay so heavy towards those affirmations, you guys. Right there, you guys, hold it, get it in the mail to you. All right. Good evening, California. Good evening. Welcome back, everybody. All right. This evening, as promised, all right, I don't have this huge presentation for you, but I do want to use this for our little representation as of now. All right, there has been some changes made to our plan. All right, let's see, that's not our demonstrator. These PowerPoints never really work too much for us, do they? All right. So you guys, here is what our syllabus has looked like up to this point. All right. And you guys know me, climbing towers and being in the construction industry. We have this thing called red lining. Now this evening, we are going over pivots as promised. All right. We've been over 2 weeks of support and resistance. We've been over trend lines. We even had a detour last week and went over trade plans for those of you guys that want to jump into the market, market mastery playlist on YouTube. All right, this week we're going to be covering pivots. All right, but like I said, in construction we got this thing called redlining. I've been led in a little bit of a different direction for understanding. We're going to move these two topics that you see with the red lines and down there at the bottom with that green arrow. we're going to move up our time frame confluence. These are the changes that you guys can expect. All right. Here, after we cover pivots this week, we're going to revisit our support and resistance, our timelines, and our pivots all in one session. Okay, you guys, I feel like it's really important that we tie all these together before we move forward. Okay. And then when we do move forward, we're going to jump into time frame confluence, and you guys can reference the rest of that list as it goes on. As you guys know, we've got a line key in my lab for anybody that just needs the re-reference or anything like that. Maybe this is only your second time in the lab with me. All right, my support and resistance, as we've covered them up to this point, are going to be identified by yellow lines. You can see up here, do I have my cursor? Yeah, my yellow lines right here. All right, I use them in various ways. I'm not going to get into those specific meanings just yet. Red lines will indicate our stop loss or our invalidation levels. Orange lines will indicate harmonic scanner values. Light blue lines indicating psychological levels. Purple rays indicating pivots, which we're covering tonight, and white lines indicating vibrato alerts. All right, you guys. Another point for reference, I got a little bit ahead of myself, but I wanted just to make this note. You've got tonight and tomorrow to sign up for that branded MasterCard, you guys. And we're giving away 4 nights in Las Vegas. All right, you guys. So two nights left, or 2 days left, however you want to title that, depending on your position on the planet right now. To get registered for that, you guys. Just a reminder, here is our call schedule. Monday, we will not have any calls. We do have a bank holiday. So Monday, we will not have any calls. But just for reference, you guys, here is our call schedule. And here are our highly motivated and heavenly melanated educators, you guys. We are here for you. We support over 40 calls a month, you guys. So just tune in to us every opportunity you get. Let's go over our BYOB cash out strategy before we get any further ahead. I've got an example pulled from our GBP and ZD pair. All right, you guys. Now, as we know, because I didn't see any 111s in the chat, the BYOB cash out strategy as copywritten starts on the 15-minute time frame. All right, you guys. So being that if you guys are any bit familiar with us up to this point, all right, we're going to bring our attention to our stochastic. All right, and what we see is down here at the 20, we had our blue line cross over the red, an upward momentum. All right, and at that point, we brought our attention to our candles. And I'm going to drop us an arrow before I delete this line. Get that on up out the way. Because our next indicator is our green flat bottom candle. Okay, you guys, our stochastic being our leading indicator, our first area of interest. All right, we move our attention to our candles. We see where we had this nice green flat bottomed candle. Okay, you guys, but these two do not operate alone. We do need one final indicator, and that is this PSAR flip, you guys. If you notice, these little dots, they went from traveling above our candles here to traveling below, all in line with these motions that we've identified. The blue line cross over the red, upward momentum around the 20. That's very important. Around the 20, we had our flat bottomed green candle. We didn't have no tiny little wick or nothing. I can zoom in there. We didn't have no tiny little wick. I'll pull that back to the center of the screen for reference. Show our arrow if you guys feel the need to see that. All right, we had that candle. Then we had this PSAR flip all in line. All right, and what we don't do is just blindly jump into trades, okay? Because what we want to make sure we're doing is trading with the trend. All right, where do we find our trends? We find our trends at the 1 hour, you guys. Okay, our general direction comes from the 4 hour, but the current swing in the market we're going to find at our 1 hour. Okay, so here at the 1 hour, you guys, we found ourselves around the 20. in this oversold condition. Let me get a better view. We've got some things in the way. But at the 20, we were down here. It looks like price action had moved sideways for a little while, but we were still around this 20, okay? A prime place for positioning, all right? And it even looks like that. So keep in mind, this is a historical trade. We couldn't see any of this action up to this point. All we could see is everything happening back here, this little jagged up, down, and then you see how the blue line crossed over the red. This is, again, that looks like territory, you guys. That looks like territory. So let me get this coming on down. All right, you guys. Going with the swing of the market. All right. We are ready to jump down to our 5 minute. Ready to jump down to the 5 minute and seek our entry. Okay, you guys. We're not going to enter the trade just because we jumped up to the 1 hour and that we saw that we were in that looks like territory, you guys. We want to make sure that price action is still in that buying initiative when we're entering the trade. All right, you guys, because if it's not, we want to wait for price action to correct. As we know, it doesn't move in these smooth, like just steady lines. You know, it goes up and down, up and down. All right, so we want to wait for price action to correct or for it to predominantly move in that direction. And what I mean by that, for those of you guys that don't have the quickest trigger fingers or pip reaction times, as we're going to move forward and getting back to calling them. All right. Once we approach this line, you see how our candles began to get into like more of a wick situation. All right, and right here we had as much of a correction and pullback as we were going to get. All right, you guys. So if I put my line right here at the top of this wick and I go down to my 1 minute, what we'll see when I get us in frame. Let's see where our reference is. A lot of activity down here on the 1 minute. A lot of activity. But when we get down to the 1 minute, is that you begin to see like how shy that price action was. Okay, you guys. So for those of you that didn't have our super scalpers had that really quick reaction time. They saw that PSR flip. They were ready for the market execution. You know, I'm not, you know, however, you know, you guys enter into those trades. All right. But even right here, we see that that good, so we have the reaction and we have the pullback. All right, you guys. But either way, once we were at this line here at our 5 minute that we identified. Now, if you've been in classes with me before, you know that we are not laying down support and resistance at our 1 minute. Okay, this is purely for the sake of conversation right now, you guys, because what I'm identifying or what I'm trying to get to you guys is that after we had our PSR flip, all our identifiers, all right, for those of you guys that feel like you missed the trade or something like that, that you're labeling it that's not it. All right, we have all what we identified on the 5 minute time frame was this final correction right here, you guys. Then what we started getting was these nice flat bottom green candles. All right, down here we knew we were looking for this buy. Okay, we knew we were looking for the buy. We had everything in the line for us telling us that we're there. All right, and after we let price action correct, you know, that patience profit. All right, and we started getting these smooth, these really dominant flat bottom candles. All right, you guys, that's when you're seeing the nice trends, this nice strong trend. Okay, you guys, and there we have our BYOB cash out example. You acquire your first 10 pips. All right, first 10 pips. We're going to change the idea of this one. So this would becomes the entry point. Let me actually tighten that up for you guys and maybe get a better representation because it's historical anyways, right? Entry point, you allow price action to go above it. You let it hit the correction. All right, you guys. It rose when it corrected. Oh, sorry, I didn't mean to do that one. When it corrects, then this becomes an entry point. All right, you guys. You don't want to enter it when it's in that moment, initiative, you feel like you've lost the trade, you haven't, you just wait for that correction, and then this support and resist, this line right here becomes your entry. All right, so 10 pips or your first support and resistance. We know how to find that by looking to the left and finding past market activity. Being that if I were to go to the higher time frames, I can, from experience, I can tell you that we were probably moving a little bit sideways. All right, don't hold me to that, but everything, well, we could go to the example for that, but that's not what we're focused on tonight. All right, we look to the left for the most recent market activity. All right, you guys, we've got a lot of wicked out situations. Keep in mind, we are still down in our 5-minute. Let's go up to our 30-minute and identify what our first support and resistance is, because we don't want to just let trades go because we experience one correction. All right, one bit of pullback. Our first support and resistance actually ends up right here. We'll make that solid just to give you guys some clarity on that. All right, first 10 pips in cash out, or your first support and resistance line. We can go up to our 4-hour. All right, and sure enough, you guys, you see we have this uptrend, we have this downtrend, and we have this, even though as short as this time looks, since it's not that many candles, I brought us up to the 4-hour time frame, and sure enough, we went to this sideways motion. All right, this is just how price action happens in the market. Okay, you guys. So let's get away from that for now. Oh, yeah, I had a completely different example for BYOB cash out. That's great. Just use that as a testament as to how often it happens. Here, the example I actually had set up for us, I highlighted a re-entry point. We're on the 15-minute. You see how we're a little bit higher. Just exampling how being around that 20 is still valuable. This seems to have gotten a little shrunken up. All right, but if you notice where my green line intercepts with these, we weren't down here. Like you see down here, we're below the 20. Then right here, we're around the 20. Here on this GBP pair, USD pair, I had identified this uptrend. All right, you guys, just clues. You know, we're not here for a deeper understanding of the cash out strategy. We're here for an understanding on pivots. So let's get to it. And I think I had us in our euros. Yeah, nice clean chart for our euros. All right, so up here at our 4-hour, you guys, find, we're not going to go into dropping support and resistance immediately. All right, what we're going to start at tonight is with our pivots. You can go up here to the indicators block and go to pivot points standard. Okay, PIV. You can delete that. You can just select P if you're in a hurry. You can spell it if that's your persuasion, or you can scroll all the way down. This is a tool. All right, I've mentioned it to you guys before that this isn't just a website that you go to. This is a whole, like a tool analyzer. All right, but that's how you get your pivots on there. Don't get to clicking it too many times. All right, well, I just scrolled away from that. Gotta use that. So you see how they've populated here in the background. Don't get to clicking them twice. All right, we only got so much that we can put on these charts. All right, as we need it. All right, here are our pivots. All right, they are all over the place. All right, when we're pivots represent values calculated on a level by an algorithm. I want to say like an institutional level, but more so necessarily, these are generated by a formula that uses highs and lows from the previous session, be that the daily time frame, being the 4-hour time frame, whatever time frame you're on, you're going to find that the pivots continue to go on and divide themselves. All right, you can always find a pivot to chase if you want to. Okay, but how I want you to use the pivots responsibly is going to be on the higher time frames. Okay, you guys, we know that we get our analysis, our heavy analysis from those higher time frames, and then we jump down to our lower time frames for kind of like our field of play, right? Being that we've got a currency pair in an example and not an indice, being that we have a currency pair in this example, our time, our field of play happens at the 15-minute, all right, and the 5-minute, all right. We don't want to be living down at the 1 minute chasing stuff, okay. It's good to be aware of, it's good to look at and all that, but where we want to live for solid analysis, like solid structure, it's going to be at that 15-minute, looking for entries at the 5, analyzing what's happening, okay. But we are getting the larger picture from our higher time frames. Like I've told you guys before, you know, so, like way back when, you know, or not so much way back or nothing like that, but someone may have heard of charts being referred to as like a coloring book after we get to dropping all our lines and stuff like that on the charts. But one thing I kind of resonated with is I didn't feel like I was just, you know, coloring, you know, some picture that was already drawn out for me. You know, I was painting a picture. You know, you guys can consider me like a metaphorical Bob Ross. We're gonna throw up some happy pivots all over the chart. Happy pivots. Okay. So what our pivots are, you guys, is they very plainly represent supply and demand. Okay. We've expressed it before that our candles represent decisions made by real people. Okay, you guys. The pivots that we're going to use for our analysis are like when we're in our current active live trades, all right, are going to be the most current ones you have here. All right, for this example, like this part of our demonstration, we're going to drop them on our daily time frame. We've already got our rays here selected. So you guys may have seen me drop these on our charts on previous calls. All right, and you always see me if you've noticed this one that has the P right here, this pivot, I always make a little bit thicker. All right, that level 4, level thickness, width 4, whatever you want to call it. This is because this is the center point of our market. Okay, this is a center point of our zone. All right, the center point of this high and low. This is the average in the middle of that. If we are above the pivot, it's more commonly referred to as, from a technical standpoint, being in a bullish sentiment. If we are below the pivot, it's what's considered being in a bearish sentiment. All right. If we are above this pivot, you know, you're going to find really strong buys. All right. Below the pivot, it's going to be common that you find really strong sells. All right. To make your way up to this area, you have to have those buys. To make your way down in this area, you have to have those sells. Okay, you guys. Again, keeping in mind that these just represent supply and demand, just for the breadth of knowledge. Okay, you guys, that's not like necessarily how we're intimately analyzing these every single day. Like, oh, let me count how many sellers there are on the market or nothing like that. No, but just for like a sake of reference, you know, you guys, up here represents, or they represent supply and demands. We're in a wealth of demand. You know, the demand's been high. We've been buying. We've got a wealth of buyers. The demand is high. Okay, when that demand weakens out and we ain't got as many traders buying. All right, when we're going into this sell, all right, we start coming back to our pivot. All right, now around these pivot levels, these R1s, these S1s, it's gonna be really often that you find periods of consolidation. These are where breakthroughs happen, decisions in the market, or pivotal decisions in the market are made, trend reversals, all type of good stuff. All right, you guys. Another important thing to recognize is that our pivots create support and resistance. Okay, if I come up here And I use, because we've been in class, we've been in the lab before, all right, being that we're up on the daily time frame, these are significant highs and lows. So let's use my R1 and my S1 as my support and resistance. R resistance, S support. All right, you guys. Let's full screen our candles. We're not going to be so heavy on the oscillator tonight. Anytime you guys, to questions, comments, testimonies in the chat, drop them. All right. So back to this, if you'll notice, we can go back. Hopefully I found us a good example. We're going to look for what happened the last time price action was here, you know, because that's what we do when we're looking for support and resistance, right? We look to the left. We look for previous market activity. All right, you guys. And here we see where we tested this as support. We tested this as resistance. We made it all the way right here. We rejected fully off of it. All right. And you see we had that nice downtrend. All right. Following with me. I don't want to get to really expanding nothing. But even so, right here, you guys, you see how key or how instrumental, how some other synonyms that you guys can relate to, how many times price action visited right here. These, like I said, these are these are created on an algorithmic, if that's a word, I'm going to create my own tonight, level or understanding. All right, you guys. These are generated according to a formula, again, using those highs, lows, and you have those average points in the middle of the market. Now, if you guys are noticing anything, I use this same structure, the same concept when I go looking for my support and resistance. All right. You guys up to this point know me, know 111s in the chat, right? What you call it? When I get on our naked charts, or our not so naked charts, but when I get to our blank charts where we've just got our indicators on there, even when I pull from our harmonic scanners, you guys know that I'm dropping those support and resistance lines, those yellow lines. All right, and I'm gonna go ahead and delete those because that's not what we're covering tonight. But you guys know that I dropped those first. All right, just keeping in mind, pivots create support and resistance. They are support and resistance. Now, as far as like changing them into take profits or this, that, and the third, I would say that they are more so better for exits. Okay, I wouldn't want to necessarily recommend a pivot point like your main pivot or your R1 or anything. I wouldn't want to use it as an entry point. All right, exit points maybe, because they are definitely places in the market where price action will like hang out. All right, so we are in this bearish or it's bullish, I'm sorry, we're in this bullish space here. So let's go ahead and get this one highlighted. When it comes to our R1s, our R2s, and vice versa, S1, S2, though, on and so forth, I bring our width down. All right, you guys, for my sake of analysis, because when I get done with my pivots for what I use them for, I delete these off the charts. And when I get to zooming in, I like to have the understanding of, hey, this is my center point in the market. All right, is price action heading more so towards my resistance or towards my support? When I open up my stochastic, whatever you want to call it, right now we're going sideways. You can see that, and like you see how we've got these wicked out situations. All right, it's really interesting because we made it back to our center point in the market, and then we consolidated. All right, if you look back here at the center point of our market, we have this consolidation. All right, you guys. So we're still up here on the daily. Let's go down to our 4 hour, because more often this is where we're going to be looking for our pivots. All right, when you're in my lab and we get on the calls. So let's open up our pivots again. I get really lazy. I just drop the P on there. These are the P's I'm pushing. Ha. Sorry if that was a little unprofessional. Pop culture. So I get my my main pivot identified first, always, you guys. Where because if you've been on these calls before, uh our center point is really important. So we want to identify that. And if you'll notice, we're below, as in on our daily, we were above our main pivot. All right. Here on our 4 hour, we seem to be below it. All right. Now, I've highlighted this before on our calls before, that our support and resistance, our lines, even though we drop them as these thin representations here, they aren't necessarily these such thin lines. That pivot, as we saw on the larger time frame, looks like this. All right, you guys. It's in this zone that's created. All right, and then this is how you can find value from them. Let me move this a little bit, and then without even changing the width of my box there, I'm right here back at our R1 and our S1. All right, you guys. So we're here around our center point of our market. All right. Now, this is where we would get into identifying trends, because we're at the center point. We want to identify the trend line, but that's not what we're here for tonight, you guys. We're here to analyze purely off of our pivots. Let me pull up an example that I have from some analysis where I use our pivots. All right, you guys, just so you can see what happens around our pivots. Now, I'm not going to get into what all happened this week, this trade. I believe I entered on the chart like Tuesday or something. I'm not really sure. So don't take this as anything current that you guys can use valuably. The most valuable thing is that I guess we're still in this upward trend. All right, but what we're paying attention to more so is these purple values. All right, if I can redirect your attention. So right here we have our main pivot. You see, I got that thick width. All right, and then it seems like we made it up to our S2, the point of our analysis. All right, we had our first one closest to our main pivot. That's our S1 or our R1. I'm sorry, because we're in that bullish property, that bullish space. That R1 and that R2. Okay, you guys. Now look what happened at these areas. Okay. Price action made its way right here, and when it's did, we're on the 4 hour for sake of subject. We're on 4 hour. So right here that we have this doji candle. Let me get that zoomed in. All right, you can see that price action hung out right there. That was some consolidation. It hung out before it made the decision to continue to move in that bearish sense, or that bullish sentiment, that buying space. All right, here we were at our pivot, and you see when it finally broke through, it fully went on to that bearish sentiment. It's bullish. Sorry, you guys. So what happened? All right, it went directly to our pivot space. That's why I say these pivots are more so good for exit points. All right, you guys. When we were in this strong buy, all right, we definitely going to go through this, because what do we know happens at our support and resistance? Price action doesn't just like get here and then hang out, take a drink, and chill out for a while. No, it keeps on moving. But what it happens, if you guys can, let me get a circle so I can have you guys' undivided attention. I don't want you guys looking just anywhere. I want you guys looking where I'm looking. We got a lot going on, okay? And we are in this white circle. All right, let me change this, the opacity, so you are, yeah, for sake of subject, drop in the chat one time. All right. So right here in this white circle, you guys see where we had this nice flat candle. Keep in mind, we are on the 4 hour time frame. Each one of these candles represents 4 hours. All right. What we had at this time frame, though, is we went from a strong flat candle. We had this wick, and right here at this next candle, we had wicks on both sides. Now, when we started to break through, we had another flat candle. But what happened right here at this very point, at this very line, this candle had this wick situation. Let's go ahead and zoom in. Let's make this a little bit smaller. Or actually, let's delete that and let's just get specific with it. Let's go to a rectangle. We're identifying what happened here. Let's go down to our 1 hour so we can see more movement. Find our box, our white box. It's probably on back there a little bit. Hopefully not too far. Where are we at, my friend? Have you abandoned me? Yeah, kind of hard to locate that one. Well, here's our trend. So it should be somewhere. Sorry, you guys, for this distraction. Is that us right there? Yeah, I believe that's us. So here at our 1 hour, we see more action happening right there at that R1. We had it directly react to that that resistance. All right, you guys, because we're in this bullish space and we broke through, price action continued with the current trend. All right, let's see what happens up closer to that R2. Didn't necessarily make it on to that space, but of course what we're not going to do is set trades from pivot point to pivot point. That's not how we use those responsibly. Okay, you guys, they're not signals by any words of the mean. As you can see, we come on down in time to current place in the market where we're at. We still haven't hit that. All right, we've gone through. Look at how much how much activity price has gone through since the last time it come to this R1. Now, are we headed for that? A lot of things tell us that we are. You know, our 4 hour we're curved up, or that's our 1 hour we're curved up. We'll see what 4 hour. You know, that's not really a good example for what's going on. Our daily chart, let's see. Okay, our daily chart's still in that buy. Okay. Time frame confluence, you guys. Time frame confluence. It all works together. It all works together. But we're not covering that tonight. All right, you guys. We're still on pivots. All right. Pivots are, or if I can get punny for a minute, pivotal points in the market. All right. They're places that you want to consider analyzing for sure. Again, more reliable for exit points rather than entry points. Okay, you guys, more reliable for exit points than entry points. All right. Just like when price action, like how price action didn't make it up here to this pivot. All right. Right. It rejected from that point. Well, it's got to make its way back down because that bullish trend didn't make it. It rejected off of that resistance because, as we've discussed, that's what these pivots are. It rejected off of that resistance. All right, it had to come on back down. Had to come on back down and see what the sentiment was really made of. All right, you guys. So you could have confidently analyzed your way down to back to the S1. Okay, and then from there, like I said, responsibly analyze your way down or back to the pivot. Now, I'm not saying because we rejected off of the R2 that we're coming back down to the pivot. Okay, you guys, what I'm saying is when price action made it back down to our R1, there was still a really heavy supply. All right, the sellers still had a lot of sentiment. We've been in a geopolitical market here recently, guys. There's been, excuse me, sorry, I had a cough. Apparently, I had one more there. We've been in a geopolitical market here recently, you guys. We're around our G20 meetings. We've got tensions high between Russia and Ukraine. Investors are a little bit unsure about some things. All right. So they went to this heavy sell. All right, you guys. But we're not going to get into interpreting. A lot of these pairs react differently. So you want to spend time when it comes to bringing the fundamentals in the picture. You want to spend time intimately with each pair, watching how they react to those. Again, we're here to analyze pivots. Okay, so let's get a clean chart for sake of reference. What's my A? That was my AUD USD. Let's see. I think GBP USD was taken up. How do you keep your trend harmonic psychological lines to stay on your charts when you're switching from pair to pair? Okay, so we're going to pause for a question for a moment, you guys. So the question is, how do you keep your trend lines, harmonic values, psychological lines to stay on your charts when you're switching from pair to pair? All right. So let's open up right here. Do I have anything? Okay, so if one thing that would tell me your analysis is being erased off of your charts is a problem I had before I identified it. When you click on to the vibrata, all right, so say like right now, the last trigger I clicked on, I couldn't tell you how long ago because I manually flip through my tabs and seek them, was the Euro USD. If I click on USD JPY right now, from now on, whenever I open up a new fresh chart, like when I go to the web analyzer site fresh, that USD JPY is going to open up fresh. All right. Now, say I open up that chart again, and I just so happen to be privy to trading on the USD JPY again. I drop down a whole bunch of analysis, and some time goes on. I flip the other charts. When you come back, your page is going to refresh. Your browser is going to refresh. Okay, so being that, all right, back to the real-time example, being that the last trigger I clicked was your USD way back, you know, because I learned to recognize that a long time ago. When I open up my Euro USD pair, Euro USD amongst all my pairs, I manually go back into my symbol search, re-enter the symbol, go down to our Owanda breaker or broker. I haven't really covered, or source. I haven't really covered that with you guys when we're on these calls. I'm referencing our Owanda source. We go into our currency pairs. And then it doesn't refresh on me, and I'm able to hold on to my analysis. Now, as far as flipping through the tabs, I don't really have a problem with having my analysis wiped off. You can. That is one reason why I started laying down my pivots instead of just pulling this up and using this, because these indicators can overload your web browser as well, depending on which one you use and what kind of hardware you're running on your computer. I personally have invested in a cheaper computer like way back when, and I still find much value in using the same system. You guys see all the browsers that I keep open. If you look down at the bottom of the screen, all four of these windows have multiple tabs inside of them, and I don't necessarily have the problem with losing my analysis. Now, another point of time to keep an eye out for is when the IM Academy just naturally, or like digitally, I wouldn't call that a force of nature, but when it logs you out like periodically throughout the week, I think it happened. You can expect to happen at once. Like say you log in for the first time on Monday, you can expect on Thursday that it's going to log you out and you're going to lose your analysis. All right, you guys don't get brokenhearted about losing analysis. All right, see that as an opportunity to see new opportunities. Okay. I've said it before and I'll say it again. I'm going to say it plenty of times. I'm going to beat that horse until it comes back to life. All right. I want it to come to life this time. your analysis is a working document. Okay, so don't be afraid if you lose it. If you lose it, count to 10. We're all subject to the human condition that is frustration, but move on. All right, jump back into the water. All right, you just had to take a little break. You ate some pizza or something, get back into the water, jump back into your analysis, and continue to exercise your education. All right. Again, at any time, you guys, questions, comments, or testimonies, and during the class, you can drop them in the chat. So just making sure any key points I don't want to miss. One thing I do have here in some notes I wanted to make sure you guys understood is that around these points, like I said, decisions are made around when you find price action to be around pivots, the main center point, the pivot, or your R1s, R2s, your S1s or S2s. You guys look out for economic releases. All right, consider what's happening in the market at those points in time, because it's common that the market will consolidate around those points too. All right, so whereas in our example before, we kind of had a really pretty example where it busted through, is really volatile. All right, in your more trend-like markets where we're not in these geopolitical conditions, when we have more direction in the market, we can rely on our technicals more heavily. You'll see that price action, just how it has in this highlighted area around this pivot, it'll consolidate around there. All right, you guys. Those areas when we were talking about trend lines, find value in that space. What kind of trader are you on? How are you going to take a value or take I don't want to call it advantage of. I mean, it can sometimes, you guys, when you really get into jumping into your skill set, you guys, it can really feel like you're taking advantage of the market. Like when I first jumped into the skill set, you guys, like I got hooked. I really did. Like we were in a really volatile point in the market. I was seeing that PSAR flip on the 15-minute time frame all over the place, you guys. Those trades were shooting. Like it was incredible. All right. That was just the phase of the market that we were in. The market goes through phases. All right. Find yourself positioned to be in those phases, then you profit. All right. But when you dive deeper into your skill set, you guys, and you really learn how to take advantage of momentum, and where you're at, the space in which to trade, to take value of, when to get out of your trades, you guys, I'm not gonna to let you guys stray away from it. As educators, I can only offer myself to you as at an hour at a time. You guys, to be honest with you, you're really not going to get much anymore from me from a one-on-one. I pride myself on being humble, open, and transparent. You guys, I'm not here to reserve anything from you guys. If I was here to reserve myself, I could have just did that in my own personal charts and kept all this juice to myself. You know what I'm saying? When we're spending time in my lab, drop it in the chat. Please, please, please jump out of your comfort zone, you guys. I understand public speaking is amongst the number one fear in people. When we're talking about like global statistics, people, there are like real true story. There are people in this world that would rather burn to death. They would rather be eaten alive than to get on a stage and speak in front of people. All right, you are not alone. All right, jump out of your comfort zone, get in this water with us, drop it in the chat, your questions. We will address them. We'll get to them. Okay, you guys. I hope you guys gained a whole bunch of clarity tonight. Let's put some more pivots. We've still got a couple more minutes left. All right, just for let's see what it looks like on this chart while we're talking about it. All right. And I guess I can't really bring to any more attention than that. All right. Here we find ourselves on the 4-hour time frame. This area that I highlighted, it was around the R1 and our S1, that zone, our high and our low. our center point where we're somewhat consolidated. When we get down to our 1 hour, just for reiteration, you guys, you see how we played around with this area. All right, we played around with that area. You guys jump into the YouTube channel, you guys. Market structure playlist is where you want to find yourself at for the original education, where I went to seek my clarity to get up to this point. And here soon we're going to have this video posted up there to you guys on the market mastery playlist. We've made sure to place them so where you guys can find them really easily. Get in there, and while you're at it, and find some value in the other videos, the other recorded calls that are on there. You guys, it's imperative that you jump into that IM Academy too, and jump into your basic education, you guys. And always, always, always find an excuse to be on this call. Not just this call, the Monday call, not just the Monday call, the Tuesday call, not just the Tuesday call, the Wednesday call, and then come back up on Thursday and tell me about where all through the week you've been. All right, you guys, tapping in consistently. All right. Our visionary has said it before, quite keyfully so. What you're doing now is not difficult. All right, it's just different than what you've done before, and it's always going to be different if you don't never tune in and like kind of just learn the language, like learn how to talk about it, get used with the vocabulary. All right. Jump into those videos, you guys. Like I said before, where we got Walgreens and Walmart beat. All right, YouTube don't close, and those videos are available 20